Doc here from North America. Good morning, good afternoon, and good evening. Had a little problem there getting started because I've been cleaning up the gold problem. The gold problem was just odd. Just the amount of odd data that wanted to come in for it, and I just had to straighten that out. And then it locked the computer a little bit there, but here we are. Here we are. And it's just another unique day in financial history. And it really cracks me up. I think that's the best way to describe it. I can't believe the lack of honesty in the financial media. That's the thing. You know, what we're really missing from electronic trading, and as much as we're connected together, it is amazing how much the financial media, like Bloomberg and CNBC and, a lot of these financial services or, publishers, I guess you could call them, just refuse to talk about the honesty of the marketplace. Last night I saw somebody on CNBC, I guess it was Fox News, not Fox Business, but Fox News, which is owned by Disney now, come out and they were saying, well, how do you interpret this voting and the markets? And they give it like some type of odd, old-fashioned statistic that makes no sense in this era of quantitative easing. And there's not a word talked about quantitative easing. None. Zero. They just kind of skip over it like it's not really that relevant. The Federal Reserve, just the Federal Reserve, not counting all these other central banks across the planet, are the buyers of last resort in the marketplace now. Now, up until 2008, they were involved once a quarter. In other words, every 3 months. They were involved with when they thought that they adjusted, when they thought that they were adjusting, the financial, flow, liquid flow of the banks and so forth. It's putting money in, taking it out, the repo process. That was done a couple times a month, not even a month, a quarter, every 3 months. It was a readjustment. It was very rare, unless they thought they were chasing after inflation or something like that. Now, the Federal Reserve is an active participant every minute of the day. They have different tools that they use to influence the marketplace, and no one will discuss it. It amazes me. They just refuse to discuss it. And they use all these old ideas from 2000 and 1970 and so forth, like as if quantitative easing doesn't even exist. It's amazing. You just shake your head. That's what I do. I shake my head. I go, what is this? Why are they not willing to have the conversation? I don't understand it. Why aren't they willing to talk about the basics of the marketplace? They are just hungry to hide reality. It's amazing. And oh, hey, how you doing, Doc? If you're late more than 2 or 3 minutes, some people turn the stream off. Yeah, I was just jammed up. I didn't have much of a choice. The computer was fighting with me. I had to straighten out my the gold. And then I had to shut that platform down to do it. And I'll never open that platform again on the OBS computer. I made a mistake by doing that. I should have done it on one. I got 4 or 5 computers. 1, 2, 3, 4, 5, 6. 6 computers in front of me. I should use one of the others in all these screens. But I agree with you. I'm sorry, Jonas. I apologize. They appear to have little patience. Then they choose to miss reality. If that's what it comes down to, is that people today have that short-sightedness. How they must have patience. Gorasapa. They must have patience to trade the markets. If they're looking for a slam bam, thank you, ma'am, we can help them. But patience is what it's all about. So I am sorry. I apologize for being too late. But I see 5 people here now. That's pretty good. All right. Where do we leave off? Oh, yeah. So we've got gold. See that? You can see it in the background on Chicago Quant. We got gold straightened out. And you know what? I should go back and clean out the crude oil that also went wacko, where they changed the data on us. So let's get going along here. Let's go take a look at the Swiss, see what the dollar is doing today. But yeah, traders, it is amazing the lack of dialogue and communications about the market physically. I mean, there's a whole new market since 2008. You know, they could call it the Obama era. You know, pretty much that's what it comes down to. There's a whole new market out there. Zero interest rates are a norm. Minus interest rates are a norm. Central banks are a norm as buyers of last resort during the trading day itself. These are things that have not been the norm ever. Ever. You know, ever. So, you know, we have always interesting conversation here. This is the trading pit, and it's the electronic trading pit, and I'm one of the last remnants of fact. And it just is what it is, and I just got to get used to it myself. All right, let's take a look at the Swiss on Chicago Quant at the same time. All right, there we go. And right there, and right there. There we go. You can see it's moving up. That means the dollar is gaining in value. You can see yesterday kind of stalled out. We're getting a volatility signal because of the red and the green dot there. Over here on J4X, you can see the sell is still going on there. It's trying to shift. You can see 3 days of red. This will shift over a couple hours here. I'm a little surprised the stochastics hasn't started to lift, but then look at ours. We're not through the zero line either. And so just because ours is turned up doesn't confirm anything. It just needs to close above the zero line here. And don't be surprised when you see J4X, all of a sudden this thing just spikes up. It wouldn't surprise me at all. So that is what it is. So we are the voice of truth. That's what we are. We're the voice of truth. We're part of the voice of reality. And probably that's the reason why I hear from so many old floor traders, chairmen of exchanges, head of committees. You know, I was the kid when I was on the floor. I was the young guy. You know, these guys are 15, 20 years older than me. And they're like, I don't get it. What is this all about? You know, why are they doing this? One of them was suing TradeStation at one point. He was using TradeStation as a brokerage house, and they were trading through his limits. And he started suing them. He got an attorney and he sued them. And the attorney said, no, you signed an agreement that you would accept whatever trades TradeStation would fill you at. He was livid. This man had been a major person in the Nasdaq, you know, which is the was it the Dukascopy calls it the Tech 100. You know, Europe calls it the Tech 100. We call it the Nasdaq 100 nowadays. We don't call it the Tech 100 anymore. But that's the official name of it. And the nickname is the Nasdaq, or the NQs, or the QQQs. And he was a major part of the Nasdaq exchange, and he was a chairman of one of the listed exchanges. And he sued them, and he lost. He's like shaking his head to this day. He's still crazy. He's like, what is this going on here? What is this insanity? And that's what it is. Excuse me. It's an insanity. Will it get cleaned up? Yeah, you know it will. Reality will set in sooner or later. Sooner or later, reality has to set in. It just can't keep on being stupid like this. You know, this will not prevail, but it's prevailing right now, and that's what life's all about. That's how it works, you know. So, all right, and as you can see, like I said, you can see that the dollar is firming up today. Let's check it out over on the euro. Let's see what it looks like in the euro. We'll go to J4X first. Now that's in a daily buy. The euro for the last couple days, so I'm interested to see that. I was tied up trying to clean up the data out of gold, and we can see the firmness there. So you've got the Swiss and that going in opposite directions. Let's see. No, okay. So remember, Hinky Ashy is about 4 hours behind, so it kind of delays a lot of the process. And Doc's is able to do the hinky-ashy at live. So it's just a different concept there. And as you can see here, it is still in the buy though. You see that right there. Matter of fact, let's widen it out so you can see that even better. But it is moving down. So this will start the curve. You'll start to see the J4X. Also, the stochastic. This is what I think is one of the most successful indicators in the public arena. This on the J4X here. That's the slow-moving stochastic against the fast-moving stochastic. All right. And Douglas, good morning again to you. If I have not, I've just been, just off the rails about watching somebody on a major news show last night, just flat out living in fantasy world. And I just don't understand. Are they being forced to, are they being paid to not to report the news anymore? Is that what it is? Our media is upside down here in the States. It's controlled by the Democrat Party. 90% of our media is controlled by the Democrat Party. The vice chairman of the Democrat Party owns, or is chairman of like Comcast, and Disney's chairman is a major fundraiser for the Democrat Party. He's chairman of the fundraising committee. They control the media. It's fascinating. But the internet really allows us to communicate ideas. So it's okay. We get our ideas out. At least I do. I have to backdoor it through Europe, but that's the way it goes. It's the World Wide Web. That's why they call it WWW. All right, let's jump over to the GBP, the Great British Pound. And remember, traders, anybody that wants to change the subject, you are welcome to. We can stop our rhythm of the pattern we follow, and we can get out there and just discuss something else. Let's see. Douglas says they do, right? Inflation on everything. Yeah, inflation. Matter of fact, you can see the Fed chairman has invented a word for it: transitory. Remember in June, he invented the word transitory, meaning that it moves. Of course, inflation moves. Now he was insinuating that it's short-lived. That's the classic word for it, and in many ways, he should have said it's short-lived instead of transitory. He probably, since he has a PhD in whatever, he probably didn't want to lock himself in to sounding too ridiculous. So he referred to it as transitory. So he was referring to the idea that it's short-lived. But he wouldn't say the word short-lived because people would be saying to him, "Oh, so it's going to go away after a few months." And he did say that. He did confirm, yes, it's transitory. It'll be over with. And I said, well, wait till we go to August. When we start to see, and GDP in August will be very fascinating if we start to see a dip. Remember I said that? We'll watch and see if we start to see a dip. Right now, profits are enormously high year over year, solely because last year we were closed. So, funds have an obligation to buy. They don't have a choice. They have an obligation. They have to buy because if they don't, they will be sued. My son works for a firm that does that. He used to be at J.P. Morgan Chase, and now he is with a law firm, and he's part of the portfolio team, and that's how they work. They sue funds and hedge funds and mutual funds and anything else they'll sue, and corporations. The funds will sue when the corporations say foolish things. So. It's a really weird world we're in right now. When you incorporate a fund, a hedge fund or a retirement fund or a mutual fund, you have to follow the financial manifesto of what you incorporated, or you'll get sued. It doesn't matter how much money you make. So in other words, you could make 50% a year. They'll sue you. It's easier to win a lawsuit than it is to make money trading. So they'll sue you automatically, and so that's why I guess we're going through this crazy era right now. All right, where are we at now? Oh yeah, there's the British pound that we refer to as the cable. You can see here it's also trying to move up against the dollar, and let's go take a look at it through Chicago Quant. is it doing there? It's moving down. So, you know, this will all be straightened out soon. It's a little delayed here, but remember, on J4X, this is the best indicator you can probably see in the public arena of free indicators. This combination that Doc has put together. It emulates our mathematics about 68 to 70% of the time, back and forth in there. And that's not bad. And that 30 some odd percent is really just a time delay. It can be 2 or 3 hours later. That's all. All right, where do we go from here? And remember, traders, again, you can interrupt me and we can go look at any other product you want to look at. You know, you want to go look at, you know, the euro again, or the Swiss, or go over to gold or whatever. Just interrupt and we'll jump over to it. It's no problem whatsoever. It makes me feel alive when people jump in and say, hey, let's take a look at this, or let's think about that, or I have an idea, Doc, what do you think? Or Doc, you're wrong, I think it works this way. That makes me feel alive. I feel like I'm alive. I'm back in the trading pit, because that's how a trading pit was every day. You had many personalities, many questions, and many ideas. And it was so refreshing to see. Remember, we were all like-minded people. We had seats on the exchange. We were traders. I mean, you're walking down the street right now. You go into a store and you're going to go buy, you know, some groceries. Can you turn around to the person next to you and start talking about the British pound in Japan? I don't think they're going to want to have that conversation with you. Yeah, let's go over to that. I think we saved that too. Matter of fact, I'm sure I saved that. Yeah, so you don't have to wait. You do not have to wait for seeing something. Let's go find that. Open stock. There we are. And it should be trading live right now too. Let's see. Right there. There it is. And here it's coming to you. Who's that? That's Douglas. Here it is. It's coming to you, Douglas, live from North America in southern New Jersey. And there it is right there. And you can see that's today right there. It's pretty much unched, just starting the day off in the pre-market. You can see we're in a daily buy for a few days here. So that's cool. It's been showing the strength. Looks like the weekly is trying. You know, the weekly is, it's been in a weekly sell now since the, what is that, 41-ish area? 41 and a half-ish area? 41-ish area, 41, 30 something. And we fell all the way down to 34 in this thing, in the weekly. And then there was a good daily, the first trade was a winner chicken dinner. The second trade was a winner chicken dinner. The third trade was a buckus. You shorted it there and you lost a quarter of what you made in the very last trade, or not even maybe a 10%. So it still doesn't matter. But that's 1 out of 3, not too bad. Then this one took a day and a half, and it became a nice winner chicken dinner. And then let's see, where's this one? Where's the last sell? Oh, it's been a sell for this whole ride. So if you did it right with the right instrument, in other words, if you had options on it and so forth, or binaries, it would have been a demonstrative winner chicken dinner, because it would have had fallen from the what is that, the 37-ish area all the way down to the 34th area, $3 in a matter of 3 weeks. And then you know, it told you down at the bottom to be careful there, don't be short. And right now it's telling you not to be short. See it right there. So how's that? Does that work out, Douglas? Seems like the only way we could actually look at the Brazilian real by through this ETF, this fund. All right. Now I guess what we'll do is good. Cool to you too. Roger that. Where do we go from here? I guess I'll go back to currencies. Let's go check out the Turkish Lira. But if Douglas, if you see something you want to look at, just shout it out. We'll go back to it. I don't care. I don't care. I'm just interested in ideas. That's all Doc is ever interested in, is ideas. The freedom of thought. Let's see. The freedom of thought. Right there. There we go. There's dollar Turkish lira. And anybody new here, this is the way we roll every day for a bunch of years. Dukascopy lets me talk and explore ideas. We try to build research on here that you can access, not looking at my work. My work is the primer, because my work is so accurate that we challenge all the other tools, and this on J4X is the best tool you can find. Right here. Right there. Minus my work. So, you know, that's what we do, is we look for the truth of the market. We look for facts, reality. And the best way, we even have a fact check spreadsheet for those wondering what that spreadsheet is. It's a fact check spreadsheet telling you our indicators, how long they've been in a direction. You know, like you can see gold says 2 weeks in a buy and 2 days in a buy. And then we go over to gold. Let's do that. Let's just jump to the doodah over to gold just to confirm. Then there's gold. You can see it's been in a buy. It's been going up. It's been in a weekly buy for 2 full weeks from back here in the 1775-ish area, 65-ish area. And you can see, obviously, the high yesterday was 1812. So obviously, 1812 is definitely higher than 1764. Except for maybe when you're talking to somebody at the Federal Reserve or somebody in government. Then they probably have to figure that out. Is 1764 higher or lower than 1812? Let me see. Will I be quoted about it? Is somebody recording this? Am I on live TV or radio? Then it obviously, who knows? You know, they may debate it. If they're not on, if it's not being documented, they may try to tell you that 1764 is higher than 1812. Yeah, that's the insanity of our era. Yeah, of our times. All right, let's jump over to what we think is a better indicator of what the Turkish lira is doing, and that is the Euro Turkish lira pairs trade. Oh, do we even? I don't think we looked at what's going on here. Let's finish off the dollar side of it first. And what do we do? I think I go right there, right? Yeah, there it is. And let's put it up on the Chicago Quant, which is the primer to it all. That's a mathematical term, a primer. It's like a key or a tool, and it usually is one that's very efficient and demonstratively accurate. You can see here it's moving down on the Chicago Quant. You can see we've been in a weekly sell since here. Really hasn't gone too far anywhere. It's kind of a sideways channel. And then you can see it here on J4X. Same situation. You can see we're going down, and we got his hinky ashies going red. So that's showing you what's going on there with the Turkish lira. Now, that's the dollar Turkish lira. Let's jump over to the Euro Turkish lira. Right there. This is 2 weeks more in a sell than the dollar Turkish lira, which is interesting. And so it caught this, you know, the Euro Turkish lira catches a lot better trades in the sense of accuracy of the trend of the Turkish lira in general. And let's put it up on Chi-Town. Let's go over to Chi-Town. There it is right there. And you can see there it's been in a weekly sell since up there, and it's not doing that channel as much as it's a, I guess you could say it's a downwardly channel at this point. Because it's, you know, it went short back here, whereas the dollar Turkish lira went short right here. Did have a winner chicken dinner, of course, but still not as accurate. And 2 weeks behind, you could say, really. And it's been that way historically for the last couple of years. Definitely the euro against the Turkish lira is more insightful of the direction of the Turkish lira itself. Probably more trade, you know, so forth and so on. I imagine we have less trade here in the States, so there's less use of the currency. Just figuring it's got to be liquidity. That's the answer to it all, and usually is too in trading. The liquidity is always the answer to accuracy of a product and the direction it's taking. All right. Now, where do we go from here? We go to... Where do we go? We go to... Let me think. We go to Canadian dollar. That's right. We jump over to the Canadian, and there is the CAD right there. And it's a couple days in a sell. And you can see that on the fact check spreadsheet too, line 20. 2 days in a sell. This is the third day. See? 11 weeks in a buy. So it's a neutral position as far as we're concerned. When the weekly and daily are going in two different directions, we consider that a neutral position. Try to be flat. Be whatever way you can be flat. Be through binaries, not have a position on, through options, you know, be flat. And then let's take a look at it on J4X. Right there. I see chat line is relatively quiet. That's fine. You can just sit back and listen. I'm listening to me. I'm listening too. All right. Did I get hurt too? I guess I did a little bit. How about that? Okay. Hurt my finger yesterday picking up food for the chickens at the grain store. Dropped a 50-pound bag on one of my fingers, and that's not the problem normally, but what happened was it was at the counter so that they could do the scan, and it got trapped in between metal. Ouch. And started bleeding instantly. The girl didn't even pay attention to it. I love that. You know, you do that in a normal supermarket, they bring in the ambulance, you know, they do it at the Tractor Supply, and it's like, "Oh, can I she goes, "Can I get the tape out?" Because it actually ripped a hole in the synthetic bag, no less, or you know, package or whatever you want to call it. And my finger's bleeding. She goes, "Oh," instead of saying like, "Can I get you a Band-Aid?" She goes, "Ah, I can get the tape. We can patch that up. That's so the grain doesn't come out." I love it. That's the countryside. That's cattle country here. All right. That's why we sing Happy Trails at the end of every show. All right. So the Canadian. Let's see what we can say about the Canadian and not my finger. I went to push something with one of the fingers next to the finger that was bleeding, and it's hurting also. So they both got trapped. Only one bled. That's all. Let's see. You can see here moving down. You can see the same thing on Chicago. Oh, let's cancel that. Chicago Quant. Same thing. They're moving down. So that's very clean and clear. What else we got to say about that? We can see our weekly is trying to dip over here. I mean, we've been in a weekly buy from the, what is that? The 120 and a half area, 120.60 area. And right now we are trading in the where's that now? 126.30 area. And we went as high as 129. Where did we go in? 121. 120.60 area. Okay. So, again, we always ask that magical question. Is 120 or 1.20 less than or greater than 1.29? Which one is the bigger number? And that's why Doc is considered kind of crazy around here. Because I actually ask those questions because when we watch the financial media, sometimes the 1.29 can be greater than, or let's see, no, the 1.29 can be lower than the 120. Don't ask me how they do that, but they do. They actually say that, and then you sit there and go, wait a minute, am I crazy or are they crazy? Oh, they're on national TV. They must be sane. I must be the one that's crazy. So 1.29 can be less than 1.20. There's a topological configuration, isn't it? All right, anyway, I'm going to stop beating that dead horse, and we'll just keep on rolling along with the products here. So you can see here our weekly is trying to dip. It did it last week, too. It tried to dip and then failed at it. Didn't go into a sell or anything. But you can see this is a gas line 3.5. And what that means is that it's a gas 3 of our mathematics, gas line 3 of our mathematics, and the 5 super is a 5 of the gas line 5 incorporated into the whole process. And so what happens is that gas line 3 gas line 3, plot 1, and you're seeing plot 4 when you see the histogram and the white line here. And same thing here. You're seeing the plot 1 is the histogram. The plot 4 in gas line 3 is the green line, and then the cute little bluish dotted line is the plot 1 in gas line 5. So we're looking at gas line 3 and gas line 5 combined together. Oh, hey, Middle Age, how you doing? November beans, Doc, and November beans and deck corn, Doc. I appreciate it. No problem. Let's go check it out. Let's open that up. Let's close that. All right, close that. Close. And open the commodities. Remember, in an era where interest rates are at 0 or minus, many physical products become currencies. I know, that's a deep statement there, and I try not to make it too crazy of a conversation, or I hate to get deep in the weeds, as they say. But that's why we pay attention to gold and silver, and in a currency webinar, we're paying attention to a lot more products, solely because they become surrogates, and I'll explain how that works as we're loading up on the other. And you're going to be able to see it up on the screen here too. The way it works is that if something is traded worldwide in the dollar, if you're from outside the United States and you buy that product, that means that you have to cover your currency risk. And if you don't, then it makes you long or short that particular currency. So if you buy something that's denominated in dollars and you're from Great Britain, well, you need to sell British pounds and buy dollars now. Is that right? You buy corn, and it's in dollars. So now you're long corn, so you're at the risk of the movement of corn, but at the same time, you also need to own dollars to buy that corn. So that makes you short dollars. And so, yeah, my subconscious was right. So you need to buy dollars. You're short dollars now. Okay? You're also long corn. And so you need to hedge your corn also. So you need to hedge your corn with a binary or an option. And at the same time, you need to hedge your dollar risk, because now you bought corn, which is in dollars. You need to buy dollars, right? You need to do the currency translation. And so if you need to do that currency translation, you need to go and buy dollars. Now, if you're in Great Britain, and you don't buy dollars and you're still in British pounds, you are short dollars, physically, and long corn. And see, that's why we look at those products, okay? Well, let's give deck corn to Middle Age. There you go, Middle Age. You can see we're getting a volatility signal. Oh, no, let's fix that. That's showing you yesterday's. There we go. And there it is. You can see it's moving up today. Excuse me, it's a little unchanged and minus by a hair. But you can see the histogram in the plot 1 of 3 is moving up on a daily. Notice that we're using a super on that too, because that's the beta of it. We look at things through the beta of it. In other words, the volatility. And so this works better, more accurately, by the 3-5, the average of two different indices. So you can see there, let's see, how does that, the histogram must be the 5. Let's just take a look and see. What do we got? There it is. And that's that one right there. Style. Let's see, can you see that? You can't. Let's bring this down to you. There you go. Yeah, so plot line 1 in the 3 is green. So let's see if we can move this over like that. Let's cancel that for a second. We'll move this over to start off with like that. And then we'll open that up again like that right there. So what we're seeing is that the green line is plot 1. and it's minus. Okay, the plot 4 we have turned off because there are only 2 standard deviations of each other. In other words, they both, plot 1 and plot 4 will be both plus and both minus always. So, but we watched how they move through the time manifolds, which is these things right here. Can you see that? One of these things will do it. Where's the mouse at? There it is. So what we do is we watch how it moves through the time manifolds. That's what these mirror image lines are. So, and then we can always be a little bit more explanatory if you have an interest. Anybody out there? Let's cancel all this out. So what we're seeing here now for Middle Age is that the plot 5. I'm sorry, the plot 1 of gas line 5, that's why they call it, that's why me. I do talk to myself a lot. Gas line 3 and 5, the super, that's why I call it that. And me, myself, and Irene, yes, exactly. Talk a little weird here. And so you can see here, it's trying to get into the buy, but it's not. Now you can see here, the weekly turned up after just one, it went into the weekly sell last week, right there. And you can see right from the start of the week, it just jumped right into a weekly buy. And so when it closes this week, it'll be confirmed as a weekly buy. And then we'll be changing, notice right here, on line 2, it says corn. And you can see we were in a weekly sell for 1 week. And next week, if it stays like this, will be a 1 in the box on the WB. Yeah, and that's not Warner Brothers, that's a weekly buy. And so that's what's going on here, which is telling you to be cautious, do not be short. That's what it's telling you, and you can see the product is moving up in value. You can see we got a volatility signal yesterday. It's kind of flattish today. You can see it's trying to move up. How's that? Was that a good explanation there, Middle Age? Now, let's do the same thing on the November beans. No beans. And Dukascopy has no beans on their platform. They do follow the no beans also, give you the opportunity to trade those things. Let's find them. Right there, next to each other. There we are. And let's put it up on J4X on that situation there. And there is the... right there. This is like the big contract. That's new crop. There it is. See, same prices. And so there's November beans. Is that updated or is that yesterday's? That might be yesterday's. Let's just double check. Yep, let's fix that. Ooh. Yeah, that might work too. Let's see what happens. No. No, yes, maybe? No, it didn't. Okay, let's do this. Let's fix that again. There it is. Okay, so in there you can see today it's down a little bit, a little pressure on it. It's trying to rise. It is in the weekly sell right there. I think that's where it confirmed. Yeah. And, it did that a couple weeks ago. It started trading the whole week in a sell. So we knew that there was weakness. We saw the daily go into a sell there. The pressure was on. It was a winner chicken dinner for you binary and options traders and nimble folk. And you can see here, we started to bounce up this week. Right there, there's Monday, and we were, it's just bouncing up, and it broke the time manifold, but it hasn't flipped yet, so if you don't put your stops on or protect yourself on the hard delta, you get in trouble. And for the options, you probably took some profits because you had nice wins, and you have a limited risk to begin with through binaries and options. So that's what the name of the game is there. You can see here, it's trying to lift up, and to see that pressure on the upside there. So, we'll watch to see how this plays itself out. I'd imagine, that there's a lot of desperation for food and so forth on the planet. So I'd imagine that is definitely putting some pressure on everything, I think that's the way it really rolls. And let's see what else. Or dollars. Remember, traders, the U.S. Treasury will label you as a manipulator if you step outside of their prerequisite boundaries. Now they don't tell us what that what they are, or I guess it's unknown. It's known but unofficially known, but they will come out and announce every quarter who is a manipulator and who is not. That's so weird. So sometimes what they do is they go in and they buy beans. Let's say you live in Europe and you want to be short dollars, but it's not what the Federal Reserve wants you to do at the moment, or your central bank, the ECB. So what you do then is you go and you buy November beans. It's very liquid, just like a currency. You go buy those things, right? And now you bought them, and now what you need to do is you need to cover your dollar risk. And if you don't, then you've got a currency position on unofficially. And you can go and hedge the beans, the actual bean risk side of it, not the currency side of it, by dealing with binaries or options. So that is what goes on there. I know, it's wild, isn't it? This is a very, what's the way to describe it? The world is now very connected in many ways more than people realize. All right, where do we go from here, traders? Anybody have an opinion? If not, we will just go back to Canadian, and from Canadian we jump over to the gold and the silver. That's how we usually do that. So here we go. Let me just do this real quick. There we are. Oop, that didn't do it. Nothing up my sleeve. There we go. Oop, oop. Trying to get this thing to change. There we are. Ah! Still fighting with it. There we go. All right. Canadian. Did we finish ourselves off in Canadian? I don't think so. Just that it's going down, and the time manifold is being challenged by the weekly. That's about it. You can see Chicago J4X is turning up. You can see that. It's I don't think it was last time we looked at it there, like 10, 20 minutes ago. And you can see our math is, what's our math doing? Let's give this a refresh. It's still moving down. Oh no, it's turning up too. See? Same thing as J4X. See, right there. That's turning up. Our work is turning up, but it has not gone through the zero line here. It needs to get through the zero line to give us a really good, clean buy signal there. All right, now what we do is we drift over to, gold and silver from there, because they are the masters of currency translation when it comes to dodging the central banks what do they call it? Labeled a currency manipulator. Yeah, go figure, right? All right, and let's check that out right there. And there is gold. You can see gold is trying to move down as we speak, but still in a buy, and we are still in a weekly buy right there. Now let's check it out on J4X. Right there. There we go. You see it's also doing the same thing. It's been moving up. Since let's see where we've been in a weekly buy 2 weeks back. This is the third week now. So basically from somewhere around here, you can see the daily started to lift up too at the same time. Right there. You can see this is a daily chart here, and this is our daily chart, and then underneath it we have a weekly chart right there. But that's just our math, not the actual bars, because we're looking at a daily chart. Who needs to look at a weekly chart for that? And so you can see here, this has moved up, then it moved into the sell. Same situation there. And now it's back into the buy. Usually when the gold is moving up in value, Canadian is moving down in value. That is the norm. That's why we pay attention to this stuff. And then what we do is we just drift over to crude oil. Same situation. They usually work in that fashion with the Canadian. Not all the time, but most of the time. Let's put it that way. And there is October oil. You can see October oil is going up in value, so we have to assume, and we can do it right here on J4X again, that Canadian is going down against the dollar, which which means it's more valuable now. That's what that means, because there's less Canadian to the dollar. See, it's going down. See how that works? And that's why we look at these things. So if anybody is new here, that's why we drift sometimes in between commodities and the currency pairs, solely because they don't want to get labeled as manipulators. And they don't label the individual company that does it. They label the country. So, they can go tell the ECB, or they'll call the Bank of China, or the People's Bank of China, or the Bank of Japan, or something like that, a manipulator if it doesn't stay inside a certain range. So they don't want to be labeled as that. Well, with Biden, I don't think anybody really cares. Biden is kind of off the rails. I don't know if he's going to make it to January at this point. I honestly don't. He may not make it to January. He may be removed as president at this point. Okay. Where do we go from here? I guess we jump over to the ruble. No, we go to the South African rand. When we're looking at gold and silver and all, we automatically drift right back to the South African rand, because we like to see what that currency is doing against the metals. Usually when gold and silver are making money, going up in value, you don't have to be long it to make money. You can be short it too. But when it's going up in value, usually the South African rand is going down against the dollar. So it's becoming more valuable at the same time. And let's go find that. Right there. There is the South African rand. And we're going to put it up on Chicago Quant. You can see it's going down in value against the dollar, which makes sense since gold itself is going up in value. And then we drift over to, oh yeah, we want to go to the other side of it. Let's go, so we go to right there, and let's put that in. And we go to the South African rand. Right there, and you can see it's going down in value. And it's even trying to make an attempt to go after the weekly sell. So it's trying to change the longer term trend again. And that could be a sign if this starts to go down in value, we may be seeing a new bottom in gold. We keep on wishing for one, and the same thing with silver. We constantly do. We promise you we do. But we don't. It just doesn't have any staying power because it's being used as a currency. So it really gets interfered with constantly by central banks across the planet, funds across the planet that are allowed to exercise the product, and the Federal Reserve. So there's a lot of participants doing lots of different things that don't actually logically make sense. I mean, look at the inflation explosion, and gold and silver is actually lower than what it was before the inflation explosion started. So it's like, wait a second here. What's wrong with this picture? We're getting enormously more inflation, and gold and silver are going down in value. Something's wrong there. And I suggested that we would see, let's go back to gold and silver, gold real quick. And I suggested we would probably see that. We'll do it on J4X. Right there. And, I said this back in June. And you can see here, let's see if we can make this bigger and move it up. No. Don't do that there. It's right here. There we are. And you can see back in June, gold was in the $1,900 area. And then the chairman of the Federal Reserve said, oh no, inflation is transitory. Don't pay attention to it. Don't look behind that curtain. And now it's made a big bottom in here. Because I said, wait till August. The stats will show that inflation is not transitory. They will show that it is becoming more permanent. And so I said, then you'll start to see the action in gold. You'll start to see the action in the markets. They'll start to get more nervous and so forth. And sure enough, we're seeing that now. We're seeing that now. Again, when you have this over controlling source, which I call the Federal Reserve, or I like to call the Federal Reserve, an over-controlling source that has more money than anything that's ever existed on Earth to play with. Then when they say that they want to be long, they're going to be long because they have the equity to do it, and vice versa. If they say they want it to be down, it'll be down. And $1,900 and is $1,900 more in value or less in value than what was that? Did it get down to $1,600 and something? Yeah, it dropped over $200. So, obviously it was true. They put a shock into it saying, don't worry about inflation. Now, as I said back in June when he said that crazy stuff, I said, well, let's just wait till towards the end of the summer or middle of the summer, middle of August, and we'll start to see a difference. Because by then, what he suggested is not coming to reality now. And that's what they were hoping for with Jackson Hole, which now has been basically put on the shelf. Now it's a Zoom meeting and it's not a in-person meeting. So they hate the document stuff. They do not want to Zoom to each other and talk lies or the fallacies. So what they'll do is, since Jackson Hole now, the American Davos of summertime, can't be in person, then everybody's going to kind of step back and not talk about the truth. So they can't front run things. In other words, they can't cheat because it could be documented on an electronic device, and they don't want that to happen. They want it to be verbal, out in the middle of nowhere. They go to Jackson Hole, Wyoming, out in the literally almost the dead center of the United States, where there's just trees and mountains and fish in streams to talk with nobody listening but the fishies. Exactly. All right, where do we go from here? Let's go back to the currencies, and we're going to take a look at the ruble now. Unless someone wants to see something here. Let's go check out the ruble. No, that's not it. That's it right there. And there's the dollar ruble. And it went into the sell yesterday. You can see it there. You can see it on Chicago Quant. The fact check spreadsheet right there. Line 18, 1 week in a buy, 1 day in a sell. So it's in our neutral. Whoop, didn't mean to hit that. We're in the neutral area. Let's move that over again, the chart. And you can see the weekly is flirting with the sell, but it's still in the buy. So no real big news changing there. We go over to the Japanese yen from here. You see it's moving up, and when that's moving up, it means the dollar is gaining in value. And you can see it's still in a weekly sell, though, from back here. That's why that little pink line is here on the weekly bar. And what else can we say about that? I guess it's been in a daily sell for, 2 days? Right there. Let's just throw that line in there. Like that. And it's flirting with the daily buy as we speak. And then when we go to the fact check spreadsheet, line 19, you see that. 4 weeks in a sell, 2 days in a sell. And tonight that will be a 1 in the day buy box. Right there, the day buy box. We'll remove the 2 and we'll put the 1 right there. Like that. A little 1 will go in there. Like that. There we go. And that box there will wipe out the 2. All right, now, what else we got going on here? All right, so then from there, the last one we look at in the currency pairs is the Mexican peso. And I'm not singing that John Wayne movie song. Dun, 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 dun. Oh, we had that nice hump that happened. We saw that. See that moved up in there. But we went into the daily buy there. We were also in the weekly, above the weekly buy there. So we had a good idea this was going up, and you definitely wanted to be long your binaries and calls and everything and so forth, playing that trade in that direction. And you can see here it's holding up very well in here. Closed in a weekly buy last week. It turned into a buy right there. We'll grab that sell right there and just move that over like that. There we are. And so it's still holding up. It may have more to go. on the upside, and the dollar is getting stronger. All right, that's the last of the currencies we normally look at. If anybody out there would like to see something, we can go look at it. If not, we'll jump over to the stock indices. And that's where we go from here. We go over to the stock indices. And as you can see here, here's the S&P 500 with the market getting ready to get rolling along as we speak in 28 seconds. So you can see here, it's a 2 Tesla, as I like to call it. This is a intraday chart. And as you can see, how this works is the same math. When it's above the 0 line right there and you got green dots, it's going up in value. And when it breaks down like it did right here, it's going down in value. It tells us it's going down, or like right there. And here we go. You should see some wild, woolly action. It's still going up in value because that's what the math has been saying. And it's inching its way up and away as the New York Stock Exchange is open. Now let's see what happens when it goes into a sell. Trying, isn't it? There you go. It's in a sell. See if it goes down in value now. There we are. And that's how we trade around here, traders. In other words, we eat our own cooking. That's right. So not only are we telling you what we think about the markets, but we participate in it also at the same time. And so it went into the sell right there, and it's going down in value. Cool, huh? All right, traders. What else we got to say about that? Not much. Let's just do a quick roundup. Right now, you can see the product is just unchanged for the day. And that was a nice winner chicken dinner. Let's take a look at the Nasdaq 100, or Dukascopy refers to it, and Europe as the Tech 100. No, not that. That's a weekly daily. Let's go there to a 1 Tesla. And what I mean by Tesla is 369, the frequency of Nicholas Tesla that he loved. And he says it was the frequency of space. He used to record that, the harmonics of outer space. Figured that it had something to do with reality. And so you can see here, it went into the sell there at the opening like the way the S&P did. It is up 17 points. And then it has turned around right here and gone into the buy with a couple of volatility signals. And now you see how it's gaining in value now. Right like that. So there it is. Now, last but not least, we're going to drift over to the Dow Jones Industrial Average, the grand lady at 1 Tesla. Now, she went into a sell right at the beginning and is still gliding down. And she is down 41 points, as you can see right there. And so she has not, and she's moving at a 1 Tesla, and as you can see, she has not bounced the way the S&P 500 has or the Tech 100. And it's still gliding down. Now let's take another little refresh and take a look at the S&P 500, and you can see it's still battling along. It's trying to get into a sell. It's very on the edge. There it is. It's dropped into the sell now. So now it's joining in with the Dow Jones Industrial Average. And we're winners, chicken dinners. And then you can see the NQs, or the Tech 100 right there. Doing the same thing. It went into the sell right there on that one. And the last 2 bars are a little bit more minus than the one it went into. And see, it's gaining in value by being short. All right, this is Doc from North America, from cattle country, saying happy trails to you until we meet again. Happy trails to you, to all our Dukascopy worldwide trading friends. Ta-ta, traders, ta-ta. See you Thursday, the day before TGIM.